Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. I want to do back-to-back videos on investing in real estate in the Oklahoma City market, specifically geared to what vacancy rate means to you. And I'm going to contrast this with other places you may be thinking about investing. Investing right now is about, overall in the United States, about 32%. As of December, of all purchases that are being made out there on houses. And a lot of this is being made with cash, which means if we take those very depressed markets in Arizona, Nevada, and Florida, for instance, this is where a lot of people are buying investment property. And they're buying because the cost is very, very low. It's below the cost of building. And does that constitute a particularly good buy? Well, yes, it can mean that. It can mean that there is a real chance of appreciation. Now, the problem is what do you do with the property in the meantime? And that is, do you hold on to it? And I want to address those that are holding on, not the fix and flippers, which are a minority, but the people that are going to hold on to their real estate. One of the reasons why Oklahoma City built up so strongly in investment property with me in 2004 and 2005 is because people were getting killed on their investments in Phoenix, Arizona area, for instance. They had properties that were worth $280,000, yet it would take 6 months to 12 months to rent, and they were getting about $800 a month when they could rent it. Now, why is that? I thought that was supposed to be the great market back then. Well, very simply, there was too much property on the market. I mean, too many people were going, hey, Phoenix is the place to be, let's buy there. And so they were buying and buying and buying, and it's a basic law of supply and demand in capitalism. If you have too much supply, it's going to take a long time to get it rented, and the rents are going to go down because you're competing against a lot of people that are desperate like you. So our market started building up with hundreds of people buying properties here, a lot of people selling out very smartly, not because they saw the meltdown coming, but because they couldn't get a return on investment. So they started investing in Oklahoma City. And this is what's really, really important, is that you understand that somebody can hand you a piece of paper, and on paper you can look at these numbers and say, wow, that looks really good. You mean I'm going to get $1,750 a month for that property, and you're a really hot market, and you say, well, you know, based on that, just send me the contract. I might not even have to look at it. I'm out of state. I want to buy. Then what happens is all of a sudden you find that $1,750 is only $1,100, and you're off the market for 3 months or 6 months. And then whatever you had on paper is gone. And this is why getting proof of real-world situations is extremely important. Now, in Oklahoma City, we're running about, right now, a 1% vacancy rate. Now, anytime that we're running that low, we're still going to give you like, what's a 3% vacancy rate in terms of our return on investment analysis. The reason why is that, well, we have a strong economy. Oklahoma City has got below 5% unemployment. The job market's going crazy. We're getting 1,300 people coming in from Boeing alone. I mean, all these things are going on, and people have got to live somewhere. We also don't have a lot of depressed property. In fact, in the last 5 years, you can pretty look at our median price, and it's either held or gone up. So we haven't had a meltdown here. So it's a very strong market. Does that mean it's not a good idea to buy in Oklahoma City because you can't buy a bargain? No, because if you're going to hold on to that property, you want stable value, because some of these markets are going to lose value because of the shadow inventory coming on the market in the next few years, and they're due another dip. That's number one. Number two, again, remember supply and demand. If everybody's already there, then it's really too late for you to be there because there's way too much property, there's no way to absorb it, prices go down, vacancies go up. Now, in our second video, what I'm going to do is I'm going to give you the numbers behind this to show you how it affects you. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.